Hello guys, welcome to the start of price action and arrays series where I'll be explaining different price action concepts and going over different kinds of PD arrays and basically giving my insight into it as to how I use it in my setup day to day and how you can implement it or use it as a confluence in your own trading setups. And let's just get right into it. Order blocks is what we'll be focusing on today. So, what really are order blocks and how do we really implement it in our setups? If you've searched through YouTube or whatever educational platform you're using to learn more about trading and you've gone over SMC or ICT concepts, you might have an idea as to how order blocks are being used or why are they so important in that entire framework. But to break it down into a very simple language, order blocks is just a set of down close candles before seeing a break or a shift in market structure. I'm talking about bullish order blocks. To put it even more simply, if you guys haven't heard about ICT concepts or SMC concepts, support and resistance is a very common term used in trading, and order blocks just tend to act as general support or resistance levels on your key levels which are coherent with your higher time frame price action. Now, I personally use order blocks more on the higher time frame to get a read on the markets and to have a more clearer bias as to how I'm going to approach the markets in the upcoming days or weeks. But if you're looking for order blocks on the lower time frame, they become really high probability if they are aligned with our higher time frame bias. The stronger the displacement during the market structure shift or the break in market structure, the more conviction will be behind that order block or those set of down close candles holding price if you are looking for bullish order blocks. We can have order blocks where we are like we don't have that stronger displacement, but the more stronger the displacement is, the more conviction we have behind that order block. I'll be able to explain it more clearly through this entire snippet, which is from the Euro USD chart only on the daily time frame. So, what we have here is a reversal. We have clear downtrend here. The price has reversed and gone up to the upside. I'll start by explaining what break of structure and what market structure shift is. Breakup structure is a result of the continuation in higher time frame order flow. Like for example, this is breakup structure, this is breakup structure, this is breakup structure, or here to the downside, this is breakup structure, this is the breakup structure. But market structure shift is caused due to the reversal in the existing higher time frame order flow. What I mean by that is we have a clear downtrend here and then the market bottoms out at this point. We can't really figure it out. We can't really predict the bottom of the market, but we can more or less anticipate or identify if the market has bottomed out yet, because market will go in the opposite side of the existing order flow. Existing bearish order flow, market has gone to the opposite of the existing bearish order flow and turned it to bullish. This break of the high, which turns the existing bearish order flow to bullish, is called market structure shift. So if that's clear, we'll go over how we can identify an order block on the charts. So this is your simple explanation of how order blocks can be seen or identified. Set of down close candles before the move up, breaking market structure in the direction of higher time frame bias. Market has moved. This is the set of down close candles right before the break of market structure or the market structure shift. Now we can use this candle as an order block. Plus 1 day order block will plus or minus. The plus says that it's a bullish order block, minus says it's a bearish order block. I personally use it, it's my terminology. So yeah, plus 1 day is a time frame, OB is order block. Plus 1 day OB. So in this case, I have used the wicks as well as the body of those down close candles to identify and mark my order block. But here I have just used the body of the candles. You can do it either way. Both the ways are like there is no particular set in stone way of identifying order blocks. Whatever works the best for you. For me, I usually do it through bodies only, but it depends on the situation. I have marked both the ways out here. See, here we don't have that stronger displacement, but we still mark it as a order block because we have seen market structure shift. We have closed above these highs barely, but yes, we have closed above these highs. But here we can see these are the highs. We have closed above these highs with very strong displacement. Look at the size of this candle, the volume and the conviction behind this candle clearly tells that this order block is more strong and it is going to hold. Um, Other than that, uh, as soon as we close above these highs, price retraces back into the down close candles, and once it retraces back into our order block, we can take a buy position somewhat here, set our lows, set our stops below these lows, and we can get into swing longs and target previous highs or whatever your target is. This orange region is the 50% area of the order block that we have marked. I call it the sweet spot, or some people use it, call it as congruent encroachment as well, which is basically the sweet spot for where your order blocks or the price should retrace inside your order blocks. If the price retraces below the sweet spot, this means that this candles will tell everything. You will be able to see that if the prices retrace a bit deeper under the sweet spot, it might be a sign that your order block is weak and might not hold. Other than that, there are some notes, some important notes. Like key is the alignment of arrays with higher time frame. As I said earlier, higher time frame support level should be there around the arrays where your order blocks are forming, and the price should not be trapped between opposing arrays. What I mean is the price should not be trapped between bearish and bullish arrays or bearish and bullish order blocks. Then price tends to consolidate and more or less give a movement which might not be anticipated that easily. I'll be able to explain these concepts better with a few examples. Uh, we are going, this is a BTC chart, and this is right around last year's presidential elections, US presidential elections. Maybe this is the 4th or the 3rd of November. 4th of November candle this, and this is like the 3rd of November. And this is the 4 hour chart. We looked at the 1 day chart, now this is the 4 hour chart. And here we can see that on the 1 day, we have an order block. Price has closed above these previous highs with a very strong conviction. As you can see on the 1 day, we mark these candles, these down close candles, as a bullish order block, and then price bounced back from this order block, again swept these lows inside the order block only, and just tapped into this thin line is the congruent encroachment, the sweet spot of the order block. Just tapped inside this order block, sweet spot, and pushed up higher. In the same similar fashion, we marked out an order block on the 4 hour as well, where this was the high. Price closed with good strong conviction above this high. We marked the previous down close candles as the order block. Only the bodies I have used here. Here I have used the wicks and the body. Here I've just used the bodies, and the price closed here and then retraced back into this order block, took another position, stops below the order block, and targeted the previous swing highs. A very simple example of how I implement order blocks in my trading setup. One more example is the NAS 100 CFD. This is the 5-minute chart. So basically, what I'm doing is I am showing you examples from every type of currency to cryptocurrency to indexes. You can use these concepts across every market that you trade. Along with these concepts are valid on every time frame because price is fractal. Prices move in the similar way as they move on daily, and they move in the similar way on the 5-minute or the 15-minute chart as well. Here we can see uh, previous lows swept the lows. Price closed above these highs with strong conviction. I didn't mark the market structure shift here, that's my fault, but price retraced back into your bullish 5-minute entry order block, took an entry here, stops below the lows, highs targeting some previous highs, and yeah, a very simple implementation of order block on the 5-minute chart as well. This is the Euro OR chart. Again, going back to currency pairs, trading some exotic pairs. So this is the 1 hour chart. On the daily, we had some sort of sweep here, and we moved down to the 1 hour chart where we had clear, strong displacement under these lows, and we made formed left behind a bearish order block. So this example is implementation of the similar concept on the bearish order block. And yeah, we formed a bearish order block. Previous up close candles before a displacement downwards is a bearish order block. We had a minus 1 hour OB, which is bearish, time frame being 1 hour, OB being order block. And we swept highs, tapped into this order block. I'll go on the lower time frame now. This is an implementation of order blocks and your PD arrays along with multi time frame analysis. So as I said, that your higher time frame should be coherent with your lower time frame. We have a bias here on the daily that we have shifted towards the lower and we are looking for targets lower. Now we are on the 1 hour where we had a PD array and price tapped into it and gave us a swing failure pattern, gave us a sweep of those highs, and now we are going on the 5-minute chart to find our entry. So here we are. We this is just a 5-minute chart of the similar 1 hour chart that we saw. This is our 1 hour order block, bearish 1 hour order block. Now the price tapped into these previous highs, gave a breakdown, strong candles, gave us a market structure shift. These set of up close candles are our 5-minute bearish order block where we took our entry, we took our sells, and then we targeted the previous lows. That's how simple it is to trade order blocks when you have a strong conviction behind it in terms of your displacement, your uh, market structure shifts, as well as when you have a very strong coexisting bias which is coherent with your lower time frame ideas. So, jumping to some important pointers along with the knowledge of order block that you have already, that order blocks work better when they are aligned with your liquidity, your order flow, and your market structure. Liquidity being your sweep of previous highs or tap into fair value gaps or anything like that, they should be aligned with the bias that you have, the higher time frame bias that you have, and the direction in which your order blocks are being used. Similarly goes with order flow and market structure. If you are using PD arrays already and you have certain failures, certain problems as to why don't your order blocks hold or stuff like that, the simple reason being that you might be trading against the order flow or against the market structure, or the price might be trapped between opposing PDRs, which creates trapped order flow anyhow, which is one of the worst markets to trade in. You need to have a clear direction. Forget everything, forget market structure and order flow. Your eyes need to be trained well enough that you can just look at the charts and your eyes tell you the story that this market is flowing towards the highs or going down towards the lows. And then you can use order flow and market structure. Never trade in a trap price action range. And if you are trading bullish order blocks, you want to be looking for order blocks inside the discount of the range, and similarly goes for l- looking for bearish order blocks in the premium of the range. What I'm saying is that if you have a clearly identified range and you're looking, if you divide the range into two parts, the upper half being the premium and the lower half being the discount, that's what identifies PD arrays, premium discount arrays. So if you're looking for a bearish order block, you want to look for it in a discount range. If you're looking for bearish order block, you want to be looking for it in a premium range. As I said, multi time frame analysis and alignment of the idea with higher time frame is key. And as I showed you how poetically things work when they are aligned on uh, different time frames, like the higher time frame aligned with the lower time frame, how well the price breaks down, and how you have conviction as well as logic behind taking your trades. And to have that strong knowledge and that strong logic behind your trades, you need to implement multi time frame analysis while taking trades. And the last but the very important point is proper risk management is the most important thing ever. It's the secret sauce which I say, which I use for things which are, everybody can't do it. Proper risk management is not everybody's cup of tea or coffee or whatever. You need to have proper risk management behind every idea. And that's all for order blocks. I think we are done with order blocks and its examples. In the following week, I think I'll be making more videos on concepts like fair value gaps, order flows, liquidity pools. I haven't included internal to external range and external to internal range, but I think that is one of the most important topics if you are looking to strengthen your grasp on higher time frame biases. And that's all for now. I would like to end with this small quote which says, let time do the heavy lifting. Whatever you're learning or whatever you're doing, just keep on giving your 100% to it and just be at it, be consistent, and don't try to rush the process. Let time do the heavy lifting. Thank you so much. If you stayed till the end, or if you just viewed the video and found it knowledgeable, and if I was able to share important information with you, please make sure to tune into the next videos that I'll be uploading on this channel, as well as please make sure to follow, subscribe, and look at my other socials as well. That's it for now. Stay safe, happy trading. Bye bye.